Welcome back to Instables. Again, going over our intraday swing and long perspective as we're leading into tomorrow's Fed minutes, where we will get an update on how restrictive our monetary policy is. And again, this is after our increase in PPI, our increase in what was expected with our CPI, but lower than our prior month. Again, following through with our continuation on lower here, as we mentioned yesterday, very possible, very, again, cautious to the upside. Yesterday, as we did mention, having a pullback here. Where exactly are we headed next from here as we're testing our 50-day moving average? I'm going to go over exactly what we're looking for here. Hit the like button if you enjoy, subscribe if you are new to the channel, and if you are a day trader, if you want to see pre-market news that you want to be watching, if you're looking for data sets that you want to be watching, for example, 30 minutes before market open, the market very much does react to certain data sets and you didn't know that they were coming out, or 30 minutes after market open if you guys are trading out the gate movers, or just looking for those major volatile breakouts on news that we mention every single day in the Instables room. Go to instables.com in the description below, and for only $15 a month, you will never miss a breakout alert today. Again, let's jump into this one. So jumping into the SPY with you guys here, again, looking at our intraday perspective off the bat, again, after Thursday CPI, giving us a gravestone doji, continuing on below our 20-day moving average, and again, looking for that rejection intraday, as we did mention over the weekend. We did get that rejection, now testing our 50 as we did assume. Again, after that anticipation that we had with PPI leading into tomorrow's Fed minutes, we did assume that we would continue on with that anticipation, and that's exactly what we're sitting on. Testing our 50-day moving average now, looking to see if we can close tomorrow's candle either with an inside bar for that possible continuation on higher for a possible bounce back, or if we do drop down below our 50, that will be because the Feds mentioned that we have more restrictive or longer restrictive policy to come after last week's, again, increase in inflation. We could have that possible cool down, but one support that we are watching out for, again, that we have been mentioning, is the lower end of our trend line here. So we will keep this trend line on watch. If we do drop down below it, we will be looking for that possible rejection to the downside if we cannot hold above our trend line here. However, if we do hold our trend line, we do possibly bounce back going to tomorrow with a better Fed minutes than expected, then we could possibly look to see if we can close back above our 20-day moving average. We do have our 20-day slightly curling here with that indecisive curl to see if we will possibly continue on higher tomorrow or continue on lower, depending on what Fed minutes comes out as. Again, expected to be worse than prior since we have been getting increases in inflation and we have not been getting that increase in unemployment that we have been looking for. Although, in my opinion, as Howell seems to be a lot less worried, it seems to be that he knows that it's around the corner for us to have increases in unemployment, which could give us that possible continuation on higher here. And now looking at our swing perspective, as we're looking for that possible continuation on higher here, we have our 20 weekly moving average still just curling up here, looking to see if we can cross above our 50 weekly moving average. Again, as we have been mentioning, if we do cool down here, no surprise, as we could assume that we need to at least retest our 20 weekly moving average if we're going to cross higher here going into this week, closing on this week. We are not late to any rally. We are not late to any major dip. As long as our 20 weekly moving average and our 50 weekly moving average are on watch, this is what we're going to be looking out for to see if we can close with them crossing for that possible outlook going into next week. And that will be our momentum that we're going to be looking for as far as bounces or possible continuations on higher, depending on how we close. And now looking at our long perspective, as we have been talking about, again, retesting our 20-month moving average here. We have been talking about how this is our intraday and swing momentum that we would be getting, again, with that possible rejection, and sure enough, getting a rejection here, as we do still need that proof of concept if we're going to continue on above our 20-month moving average for that possible continuation on higher like we have been on this rally from the duration of this rally that we had since 2020. Leading in 2022, a nice rally as we did have above our 20-month moving average. Looking for that possible close above our 20-month moving average will be the watch closing this month. And lastly, as far as long plays go, we do need our 12 and our 26 to cross higher here. Again, we need our 12 to cross back above our 26, or else we will not get that continuation on bullish momentum. Again, we have been getting that continuation on bearish momentum as we did cross lower. We have been selling off through the duration of that cross with our 12 below our 26. Now we are curling lower here, being cautious as we are, making sure that we do at least start to curl back up here. Again, we got our slight curl, giving us that short-term momentum intraday that we did mention, but we are now curling back over, very cautious to the upside, making sure that we do possibly curl back above our 26 will be key for that short-term momentum, but making sure that we do cross overall for that long-term momentum. That is our long perspective. Again, leading into tomorrow's Fed minutes, we did have, again, higher than expected CPI last week, however, lower than prior, but not exactly as low as we did need for that major continuation on lower in inflation. So we'll see exactly what the Feds mentioned tomorrow. Again, Feds have been going back and forth the last couple of weeks on, again, very restrictive policies that can come since we have not been getting our increase in unemployment, like I mentioned. We'll see exactly what they mention tomorrow. But as far as tomorrow's move, looking at our daily chart, looking at our intraday momentum, either we do close below our 50-day moving average and we look for that possible retest on that continuation on lower if our 50-day moving average does cross back above our 20-day moving average. However, if we do possibly bounce back, we will see if we can at least continue on above and close above our 20-day moving average. So again, we will keep Fed minutes on watch tomorrow at 2 o'clock Eastern time. Now, again, with that said, if you are a day trader, if you're looking for pre-market news before market open every single day, if you're market prepping, looking for very volatile breakouts throughout the day, go to instables.com in the description below. And for only $15 a month, you will never miss a breakout like today again. And again, all of you Instables, I appreciate you guys continuing to take what the market gives us today. Pretty choppy, but very nice movers still, even with higher risk movers. Very nice breakouts today. I played a couple of those. Very nice breakouts. We will see exactly what Fed minutes comes out as tomorrow. Being cautious going into tomorrow, in my opinion, is extremely key. And again, if you guys do like this video, it does help the channel grow. And I do appreciate it very much. And again, God bless you all. And I'll see you guys in pre-market.